Hello Dairy Today viewers. On behalf of the Market 360 advisors here at Stuart Peterson, I'm Bob Devenport and this is your Dairy Week in Review for March 6, 2015. So as usual here, let's get started by taking a look at where our CME dairy components settled at the conclusion of this week's trade. It was another pretty quiet week for cash cheese overall, but a little bit higher. Blocks settled at 156 even, up a penny and a half on the week. Barrels settled at 149 and a half, up just a quarter cent on the week. Cash butter settled at 175 even, up 5.5 cents. And April whey and powder took a little bit of a hit, with whey at 43 and a half, down a little bit over 4 cents this week. And April non-fat dry milk took a bigger sell-off here this week, settling at just over 109 and a half a pound. That's down a little bit over 11 cents on the week here for April non-fat. So switching over to Class 3 futures, it was a negative week overall, but again, that followed a pretty decent up week from last week, and that just seems to be the pattern that Class 3 prices have been following for a little bit over the past month now. The April contract settled at $15.50 here this week, down 37 cents. At the same time, May also settled at $15.50, but posted much larger of a loss on the week, down 63 cents. Overall, our 2015 Class 3 futures average price settled the week at $16.41. That's down 45 cents from last Friday's settlement. So let's talk about what we did see in the cash dairy markets here this week. Obviously, generally the main driver of Class 3 futures here. In cash cheese, things continue to be pretty quiet overall. Again, things have been kind of flat and sideways over the course of the past month or so, with the black barrel average holding within about a 1.5 to 2 cent range from high to low over the course of the past month here. You can see that on the chart here. Again, this is a chart of the weekly black barrel average. Now, when things started flattening out here after this little bit of a rally, that was at the last week of January, so you can see that this flat line here represents over a month's worth of trade now that the black barrel average really has not moved. But at the same time, we've been seeing a lot of volatility within the Class 3 market, which is pretty unusual, but we haven't really seen a breakout in one direction or the other. It's been kind of sideways between a wide range. It seems as though the Class 3 market could still be waiting on more of a breakout in cash cheese prices before it really picks which way it's going to be trending. So I think right now you could still make the argument for seeing prices break out to the upside for maybe one short rally higher here, or seeing prices weaken again and break out to the downside, which would mean that we're probably going to be looking at new lows as far as cash cheese goes, and that would put us at risk of seeing another big sell-off in Class 3 if that's the scenario. We're just going to have to wait and see here. I guess the one thing that was a bit concerning this week was the Fonterra Global Dairy Trade Auction, where cheddar cheese was up over 10% in this auction, and we didn't really see any follow-through support from that domestically here. Cash cheese prices didn't really move, and Class 3 futures sold off. So again, we settled the week on the black barrel average. We only moved 7/8 of a cent here, but that's to the upside, so a little bit positive. And the black barrel average settled at 152 3/4, up a little bit from last week. So let's take a look at what we saw in cash butter and powder here this week. So the blue line is a weekly chart of spot butter, and the pink line is a weekly chart of spot powder. So we can see here that butter prices and powder prices have both gone through a pretty nice rebound here. Saw a lot more strength than what we saw in cash cheese over the course of the past couple of months. And then we started to pull back a little bit. Now, butter prices, on the other hand, did finish 5.5 cents higher here this week. Most of that strength came early in the week. The second half of the week was pretty quiet. There wasn't really any bidding or offering going on in cash butter, and things finished relatively flat, but all in all, at the end of the week, though, cash butter did post a 5.5 cent gain, settling at 175 even. Now, powder prices, on the other hand, were a little bit more negative on the week. We saw a lot of offering take place. So you can see that powder prices went from below $1, and we rallied pretty significantly up towards about $1.15 or so. And then we pulled back quite a bit here this week off of that recent high here. And the sellers just really seem to be offering pretty aggressively every day in cash here this this week there was multiple sellers offering carloads of powder here, and that pushed the price down double digits to finish out the week. Cash powder prices finished 13 cents lower on the week. That's at 102.5. Again, that's down from last week's high of close to 115 or so is where we were at prior to this week. So that's a pretty big sell-off here, especially given the fact that powder prices in New Zealand have jumped up quite a bit in response to the drought conditions down there. Now, New Zealand has been getting a little bit of rain, so that may be putting a little bit of relief on things over in New Zealand as far as powder prices go. But again, if that was going to have a really major impact on our domestic markets, I think you would probably start to see a little bit more strength out of our domestic powder prices in response to the risk that supplies in New Zealand might be a little bit tighter going forward, and that could shift a little bit more demand over to us. But at the same time, the stronger U.S. dollar index is also limiting the positive impact that the tightness in supplies, if this drought were to continue, could have on our prices from the situation in New Zealand here. So again, that's going to have probably a less and less impact as the market seems to have priced a lot of that in, and as the dollar continues to strengthen, that'll offer resistance to prices really across the board. So let's now take a look at our second month Class 3 milk chart. So here's a weekly continuous chart. Now our second month contract is April. March rolled into that front month spot on Tuesday, and April is now in that leading second month spot on the board here. So again, not much has changed here from what the chart looked like a week ago. We've kind of been chopping sideways here within a pretty wide but sideways range. There's been a lot of volatility. We've seen a lot of big price swings over the course of the past month or so. We've really been going back and forth between about $1 to $1.30 range. We seem to rally up to the top end of that range and then sell off about $1, and then we rally right back up to the top end before selling off again. So the market's very mixed right now. It's not giving a lot of signals as far as which way it might start trending once it finally does break out of this range. And as I mentioned earlier, I think it could possibly take a breakout in the cash cheese market to really break Class 3 prices out of this range as well. So you can see that things have been consolidating, though we are still up quite a bit from our January low, which is about 14.25 rather, on the second month continuous chart here, and we got quite a ways higher here. We got up into the 16s here recently. The April contract did settle at $15.50 here this week, down 37 cents from the prior week, but again, still up quite a bit from the January low. I think the risk would be if we did break out to the downside here, if cash cheese prices started to feel some pressure and the sellers came in offering a lot more, I'd say the risk on the downside would be going back down and possibly retesting these January lows around 14.25. On the other hand, if cash cheese prices start to strengthen, the buyers come in and start picking up carloads and pushing prices higher, that could be the catalyst that causes an upside breakout here, in which we could see another rally coming if that scenario plays out, and it could present some good opportunities as far as your milk hedging goes. So something to keep an eye on. Again, right now, very mixed picture though. It's hard to tell which way things might go, whether they go down or up. So it's best if you're prepared to have a plan in place for what you're going to do if we do see an upside breakout or if we do see a downside breakout, knowing that there could be additional opportunity. At the same time, there could be a lot more risk coming again. So looking at the week ahead here, we're going to have a USDA supply and demand and crop production report out on Tuesday, and that's about all we have as far as fundamental reports go over the coming week here. So aside from that, that really is going to do it for us here today. On behalf of the Market 360 advisors here at Stuart Peterson, thank you for watching and have a great weekend.